go. All right, so the scalping bot logic is coming from Rob Carver's latest blog post where he dips into the wicked world of retail intraday trading strategies, which he has a lot of contempt for. But it was a cool idea, and immediately was like, "Oh, we can do this in a second," and Sierra implement this thing. And I think better than his idea. I'll tell you why it's better. I think because of the PA zigzag is the thing. But his idea is basically like, okay, you see from this paper. It's a paper I've actually posted in Discord on at least one of the Discords recently about trends on different time scales, and basically you have mean reversion on the intraday. On the maybe it's on the 2 to 30 minute horizon, something like that. But so you're looking for basically short-term mean reversion, and he's doing it by says, okay, you define a range. You define a range, and you set limit orders at the edge of that range, and they're OCO orders. So one cancels the other. So if one side gets hit, kill the other one. But when they get hit, you want to put in a bracket. You want to put in a stop, and you want to put in a take profit. And he's always looking to take profit at the other limit order on the other side of the range. Whereas here it makes this real easy with OCO orders, and you basically have two brackets sitting here, each with their own stop and take profit. And when one side of the bracket goes, the other side disappears. So and then our little bot looks for when this trade is closed, then it resets the bracket. So just keep doing that all day. And it's in the free variables are basically how many contracts you want to risk. There's some sense I think it would be fun to mess around with making that variable, being able to control that. So you could scale up, scale down based on trend, patterns, time of day, effects, whatever you want to do. I think there are different ways to look at incorporating extra alpha into this thing. But I think on a base level, it's just how much you know uncorrelated are you able to correctly read the vol, and are you are you on the right. I think that the thing that can go wrong is if there's a lot of autocorrelation, you just get run over multiple times in a row. But here, if it's noisy enough, it's almost like you're getting some kind of liquidity provision. It's almost like you're making a market here. Almost like you're looking to catch the spread, the noise wiggle around the current price. And I think that yeah, again, so the free variables you got to put in a vol subgraph. You could do really whatever you wanted. Carver is doing I think what he's effectively talking about would be done in Sierra by selecting the bar width study or bar difference. So the high minus the low with a rolling look back. And so he would just be looking for the average bar breadth I think he wanted to look at the last 2 hours or something like that. That's what he said. But then you're setting your bracket dynamically as a function of that R that's defined. And then it's basically unmanaged auto trading, whatever. You can mess around with this. That'll probably this is kind of telling Sierra to leave me alone as much as possible, and to just trust my logic. If you're using server side OCO orders, I think you've got a lot of Sierra chart based protection here. And the logic seemed to run very smoothly today. Obviously, do your own due diligence here. But and run on sim. I think that my big question, obviously this thing absolutely crushed it today. I think the question I have is how much is this just a vol lover? What is it it's like buying calls and puts, buying gamma. Is it just buying gamma in the day where the thing that so I was watching it this morning. It made a bunch of money on this open vol, and then it pittered around and got run over a bunch of times. Gave maybe half of it back that I saw, and then I left the desk, midday and came back after all this insanity and was astounded by the P&L. But it's hard to tell. This is so many trades. Let's look at the number of trades. And I can show you first of all how to build this thing as basically, and let's look at the GitHub here. So let me say, let's go to our GitHub link. All right, set it like this. All right, so here's the GitHub link. You can download the code. Really, you can copy paste this is all you need. But you can download the code. You can do git clone, copy that. There's a number of ways you can get this code, but basically the point is you get this C++ file and you drop it in your Sierra chart. Copy paste this into a text file if you want. If you don't want to do all the git, so you probably just do this. Download raw file, and then you drop it into your ACS source folder in Sierra chart, which is where all the custom programs are going to be typically built from. And then if you go to build custom studies DLL, you pick that scalping bot out of your ACS source file, do build, remote build. Should work just fine. I don't know if you're using an ARM. I haven't fucked around with this, but you just remote build standard if you're using the current version of Sierra Chart. Old versions of Sierra Chart, you just have one option for remote build. This probably works fine too, but y'all may not have all that set up. So best thing is just to let Sierra Chart build it for you. It shouldn't have an issue. If you have an issue, post it in the chat. Let me know. And then you pull this thing. It's renamed now. This is the old name, but same code, same exact code as that's in the GitHub. I just have it, labeled a little bit nicer and not the, LLM name for it. Because I say the speed of cranking this thing out was very much thanks to O4 Mini High, which is amazing at Axel for this kind of stuff. It still sucks at. I haven't found, fortunately for us, my job security here is um, the LLMs are really bad at Axel for things like, I get these huge price action studies that are 5,000-6,000 lines of code, and I'm like, hey, help me polish this up, and they spit out complete and utter garbage. Like they just can't. You're out of luck if you're gonna do something really complex like a price action study. Nothing, at least out of the box. You could probably train it and do it real carefully, piece by piece, but certainly have not found it helpful with most of our studies and most of my code. But for this one, this little guy, which is, you can see it's a tiny, I think, very elegant 240 lines. It's a really bare bones minimum, nice little study. It was very helpful on. So O4 Mini High beats the hell out of the Claude and the Gemini from what I've seen on Axel coding. I like the others for other things, but the big thing that I'm doing here, kind of the only thing, is set your start and stop times however you want. I haven't played with, it'd be fun to play with the Globex bot too, and then be able to compare see how we should tweak it. Other thing I want to mess around with is other instruments, but we have PA Zigzag plugged in just on average rotation. Something that might be interesting to do on the code. I don't know that it make much of a difference most of the time. Is you could mess with the code so that you could take an up volatility, down volatility, and have one bracket. If you have different reads on these, another way to put sort of some other alpha in there is skew, again, somehow skewing your brackets. Things that I want to do with this study, but really simple. It's just PA Zigzag, average rotation, 830 to 3. They're just the dumbest basic settings I could think of, looking for a 2R range trade around the current price, and as soon as it clears the trade, it starts over. It just puts another bracket in wherever you happen to be. So I think there's a lot that can be done with this. As far as, again, the next thing that I'd want to look at is ways to incorporate, alphas. Beyond, I think there's something to be said for, just the volatility measurement here. I think having a pretty sane, not radical. Everyone knows about these U-shaped volume volatility patterns, and it's just taking advantage of that and saying, scale your bracket based on the time of day, and you can almost think of it as like providing liquidity on the assumption that rotations look like this. And right now it's just pure. There's no skew. That's just running off the randomness properties. Now there's a lot of trades. I wonder,
Yeah,
but
can we zoom in on some of those?
yeah, yeah, it's the shit pile trades, and you can't really see it on these are 1 minute bars. And the thing is, this was all done live, so this was a tick by tick thing. You can see a ton of trades even in a single bar sometimes, but the code's very fast. Sierra, I mean, this is not a heavy study. It's a 2 millisecond, like, really fast study. Compensating, all in all, let's say it has to run PA zigzag in this fast enough that it's as soon as the trade gets taken out, as soon as it gets stopped out or wins or whatever, it's slapping another bracket on immediately. Now again, I wonder with FOMC stuff, how would this do on Rhythmic? Rhythmic on a prop with simulated fills and slippage and all the rhythmic problems. But I'm very curious. If it
Yeah.
holds up really well, I'd almost be tempted to just put it in a PA and say,
I'll run it on one if you want, dude. I just passed one today.
"Oh, okay, you got a funded account."
Yeah.
I mean, I'd
Yeah, I
say,
just got one.
I'd run it on Sim for just a bit, just to see. Let's look at this. A number of trades too. I do want to see. Like, 77 trades today is a lot, but um, let's.
20.
I would like to get another. At least the rest of the week, and see if this kind of thing holds up. I don't know
Yeah.
if it's just
Yeah,
crushing
that's
it.
just your first day.
Yeah, yeah. Well, I ran it yesterday afternoon and it did well. It made, I don't know, yesterday I turned it on. I don't know. I probably turned it on after screwing around with um, a bunch of settings. Let's see. Yesterday I was debugging it, so not some of these were sort of accidents, but I started in the afternoon and it probably made, 10 points or something like that in the afternoon. But my sense is that if you had like a real hard intraday trend, you'd get wrecked. But um, you'd have to have real hard intraday trends back to back, somehow back to back
Well,
in bad ways. I don't know. Um,
I just wonder, like, can you backtest that through what do you call it? The chart replay?
yeah, yeah, you should be able to do chart replay. You do it on a tick.
You can't do
Yeah.
the stats collector.
No, Stats Collector is not going to work at all on this. Stats Collector relies on a signal. This has no signal in it, and it's
Oh,
also
oh,
tick data.
because you actually you wrote code and the study is the bot.
Yeah, yeah, exactly. Yeah, and I
Oh,
mean, again, you with the stats collector, you're relying on having a signal. This has no like, yeah, it has no signal. You could make it something like that, but it's just whenever the trade gets taken out, put another bracket on, keep going, rinse and repeat. If you win or lose, put another bracket on based on the estimated range. Um, but yeah, I mean, you could play with this on NQ. What I mean, anything. I'd love to mess with it on NQ, other CL, UB. See what some of these
So,
other popular markets do. But yeah, I would replay. I would do tick replay. Um,
and
so,
then
so
like
actually, your method is superior to his because uh he plays around in the blog post with the the F and K percentages of R for the TP and stop loss, but
Right.
yours R is a factor of the average rotation. So you're actually, um, you don't need to mess with those as much for different markets because R is taking into account the specifics of that market or
Yeah, I mean,
product.
I think it's pretty equivalent to his. I do think that the one thing that we have absolutely better than his methodology is this time of day average stuff, which is like you can know that, right? There's no, you would get into some stupid shit if you were using like rolling, like he's doing, like what's my last 2 hours average bar width? You know, you're gonna go into open and you're gonna be completely wrong, and then you're going to go into close and you're going to be completely wrong because you're going to have trained the, you're going to be working with an average bar width. That's like, and you can know these patterns, whereas like, you can, like, again, this is a known fact, Carver knows this, like, I guarantee it, is that you have these U-shaped patterns. But I get it, he's working with, it's kind of doing the simplest possible thing, and he's working with interactive brokers data in Python, whereas, this is so, I mean, Sierra is just perfect for this. Uh,
Razor,
what's up, man?
can you try replaying that chart for the what time zone are you in?
I'm in Central.
Okay, for the 7:30 data on Friday, May 2nd, which was a few days ago, where we just G'd it up from the non-farm payrolls.
May 2nd.
Like if you did the chart replay and then set it to start at like 7:20 and
This
then
guy.
watch it.
This
Yeah, I would
guy.
like to see what the yeah,
Yeah, you'll get run over right here, but yeah, let's see.
okay,
Uh,
chart.
let's see. Let me just save this because it probably.
Yeah,
Let me save the trade activity log from today.
Well, you could do Sim 2.
Oh, I could do that. Wait, how do I do Sim 2? I think I just have one Sim account
If you
right
add the
now.
trade window, no, if you add the trade window to the chart, you can select
Okay.
attach trade window to chart.
Okay, attach trade window to chart, and we can do. Oh, I don't want to use my PA. Let's see. There must
Oh,
be a
you
way to use.
make sure you save that shit though. If you're right.
Yeah, yeah, yeah. No, I think I can put another trade. Let's see. There's a way to do this. So, general trade settings, general, number of sim accounts. Let's do two.
Oh,
And then let's see. Sim 2. All right, let's do Sim 2.
okay, okay.
And then Sim 2, and then let's do, okay, the bot's on,
Start
and I'm going to have to
replay.
change the times on it so that it's not, so that it trades at, whatever, at
Yeah,
7
go
or
like
something.
7 a.m. Yeah,
So we'll say 7 to 3 o'clock. And
Friday,
then,
May 2nd.
yeah, May 2nd, and let's do this. So replay chart. I'm going to start, we're going to do accurate trading system backtest mode. And I'm going to start at 5.
got to change
Change
the
that
year
to
Oh, yeah,
20. Yeah.
definitely don't want to do 2024. Would be waiting a little while. Now, these back tests, again, it's here is excruciating on them, but because they take forever. But
Change
let's
your
see.
speed up. Bring your speed up so we don't have to watch it
We
like
could
second
we
for
could do
second.
it. We can do it on the spot. I just want to make sure it. Let's
Alright.
see. Let's see how this does. I'll speed it up, but just want to make sure we
Yeah,
get
yeah.
get it started correctly. So I haven't messed with. We could probably get away with a crude standard replay. Come on, you bastard. There's only one chart, so. Hmm. I wonder if it's loading a whole mountain of tick data that it normally will skip. Let's see if we can do. Uh, yeah, whatever. We'll wait for it. So, yeah, I mean, I think the Sierra's got pretty good back test, and that's what you'd have to do to test this thing out. And um, they're not perfect. You have to keep an eye on it. But what we'll see. We'll see how it does here if it ever loads. Um, but I'd watch it, make sure it's acting sane, and then you can just leave them on the background. Let it run around the clock because they take forever. Um, but that would be the play to make. I was just doing it, testing it live out of sheer laziness, but this is what you want to do. So, man, it's taking a unusually long
Yeah, I would
time.
like I would cancel that or something. I think it got stuck.
I
Was
think
it
you got stuck
May
too.
2nd? Like it's not that far ago.
Yeah,
Right.
it really isn't.
Well, not that the chart data download
Let's see.
cancel all.
Cancel all downloads. We may have to restart it. Being a bastard.
Yeah,
Okay.
something seems wrong because it shouldn't take that long.
All right. Let's start it over. Got jammed up. Let's just do
Ha-
standard replay out of laziness. Um,
Has anybody besides us shown some attention to this?
yeah. No. A little bit. I got some. I got a handful of likes on it. Um, but I think. Let's see. Okay. So we're back up and running. Let's do Chartbook 23. That's not the one.
26 or so. Oh,
Chartbook 25.
yeah.
Chartbook 26.
It's one of
Chartbook
those two.
26.
I think it was.
Close Chartbook. New. All right. Yeah, this guy.
Yeah, that's it.
I might double check the trade
Yeah, here we go.
account.
So, and maybe that's okay. So that's on Sim 1. Right. And then we got to attach trade window. We're going to go Sim 2. And we're going to go
No,
to 5/2 first thing in the morning. 7 o'clock. Let me go to replay chart, control panel. Make sure I change this setting again here. If it hadn't, yeah, we have to reset this. 7 o'clock. Let's see again. Let's try just the lazy version of single chart, standard replay, speed 1. All right. Let's see how this goes. I don't know. Let's just. I don't think it'll fuck with my other trade data. We could keep it separate on that. Okay, so here we are, 7 o'clock on 5/2. And then we could, um,
so it has two existing open orders at the same time and is waiting for one to be filled.
yeah, it's an OCO, so you'll see it. It'll hit one of these and cancel the limit order on this. So you got two entry limit orders, a sell limit right
Okay.
there, buy limit right there. They're a little staggered because of oddities in the
Yeah.
code that I could clean up about using. I think Sierra's rounding doing the rounding for us.
Like an epsilon.
Yeah, I'm getting a float, and it's an epsilon that's getting rounded by up and down by a tick on some of these. So yeah, we could do better on
Yeah,
that.
we could fix that. I'll take a note.
Clean that up. Just do you do sc dot round to tick size or whatever, and then sc dot tick size. We'll give you the one that works for that chart for whatever chart it is. So yeah, and you could check. You can watch throughout the day and watch the bracket adjust based on this, based on these sort of rotational averages. So think about if you do a real fast back test. Uh, okay, you saw it canceled the other one. Yeah, whatever. It took it out here. So now you're left with one side looking for a 2R trade to the other side based on the settings here. Again, you have some wiggle room on that. But you'll see it'll take out half here. Or okay, so it failed on that one. Reset the bracket. And again, that was a half R. So I wrote 2.75 points, which is about half of this, whatever 5.6 up to 5.7 up to rounding. So yeah, I think we can improve it, like Vespa said. Thing is, when you get this, I'm tempted to crank this up real fast, but you can see Sierra sometimes gets goofy about it when you do it real fast. That'll sometimes be inaccurate.
Really want to see what that P&L will look like for the day.
Yeah, so it's fixing to be your non-farm payrolls here. The calm before the storm.
So big moves like that are actually bad because yeah, that that's why.
Well, no, it's liking the vol. Again, I'm like, I don't know how
Oh,
much to trust some of these on because Sierra replay can be pretty wacky.
yeah.
Um, so and then factoring in the costs, and you say commissions and then slippage on the stops. Nice thing is limit orders, but also limit orders. If it's just ticking them, you gotta wonder, how accurately are you simulating your fills?
What
Um,
if you what sorry, go ahead.
no, no, that's all I was gonna say. It's just the question is, did you actually get picked up? So on the simulation, real reality here. See, you get these. Well, yeah, when you get a sustained move, you're just gonna get run over and over again. But
I wonder if you what so still quite simple, but you I know that PA zigzag has average up rotation and average down rotation. You could separate out the like R value. You could have like R up, R down, and do different calculations for the short and long side.
totally.
Although they're
Oops.
they're so close that
Oops.
the rounding would make them the same.
Yeah, I think for this, for most, I wonder if there's any markets that would have noticeable. I mean, certainly on different time frames. But I think for this, on the low enough time frames, everything's probably going to be pretty equivalent. I don't know, man. It looks like it's a pretty fun day for this strategy.
It's not bad. I mean, it was 50 points at one point in time. Damn.
Yeah.
Well,
You gotta
yeah,
like turn it off too. You're like, okay, good. Stop.
yeah. Do you think Rob Carver would ever turn it off?
Yeah. I don't know if I thought he specified a time of day thing. Maybe not. Maybe leave it on.
Well, he specified what he called the speed limit, which was basically like uh, Well, yeah, he did the time of day, but he also did the speed limit, which was like basically don't dig the hole so deep with fees that we're not going to be able to get out of it.
Right. Yeah, some products are going to be too expensive. My sense is that probably, I don't know, I'm very curious with UB, but um,
Hmm.
the whole thing is like sharp cost is what you want is like, and I mean on this one, ES and NQ are as cheap as you can get on volatility adjusted costs. Like you get the most bang for your buck. They're very cheap products in terms of yeah how much wiggle you get, how much volatility you get. So that's effectively your Sharpe ratio, your cost in terms of Sharpe ratio. Vol adjusted costs are the lowest possible in probably the whole world of all futures, the universe on those. And that's going to make a big difference when you're trading a billion times a day. You know, when you're trading 70 times a day, let's say, because costs will really eat into this thing. But you know, 77 trades on ES, assuming that slippage was pretty clean today. You definitely, you know, definitely well in the green on that one, rel cost. But yeah, I'm curious over long term.
So with micros, you might not have been actually.
For sure, yeah, you absolutely would want to trade this on the on minis on the cheapest,
Oh yeah.
because the micros are very expensive, Sharp ratio cost. But here we go. I mean, at this rate, we'll be able to watch the whole day play out
Yeah.
here. But yeah, I mean, I think the question is, yeah, can you do a deeper dive on what kind of patterns does this thing really like? Is it matter that I mean, presumably what matters is that you have an accurate estimate of what this volatility is going to be, and you're providing liquidity around that um, estimate, right? Like, what are you getting paid for here? I think is the question. Like, what are you getting paid for? You're getting paid for properly estimating volatility at the time of day, and you're, I think, yeah. And the question I have is, yeah, you're providing liquidity, right? You're providing liquidity around a time of day vol estimate. So that's there it is. Like that's what you're getting paid for. And I'm curious if you can sort of verify that thesis and see that yes, indeed, you know,
I
versus is it,
wonder, like, I'm sorry. I
yeah, all good.
wonder if, like, if you have like a choppy overnight session where range is defined and it's just going up and down, it seems like this would be perfect in that more like low volume environment also, because all you're doing is reverting back to the mean every time. It's reversions. And so there's some nights when the overnight session is just monotonous, but there's a method to it, and this might work on that.
Yeah, I wonder. I so my question on that is basically it can be. It depends on the time frame. I think is the
Mhm.
question. So if you're mean reverting, you know, you're chopping overnight in a range, but if you're real linear in between,
Yeah.
rel, you know, whatever your you know estimate time frame, whatever your zigzag, you know, again, the free parameter here is picking a time frame to define the vol on. Right here, I'm just doing the PA zigzag at the frequency that I can see the U, that I can see the
Mhm.
you know the famous intraday equities pattern. Um, and so I could see that like overnight you could get like a real choppy range bound market, but on this sort of on this time scale, it may be very drifty. It may be very linear, and that would be really shitty for this. So yeah, things to play around with. I mean, you could also slow it down, right? Like you could use this hypothetically on any time scale. You just got to define your what's your zigzag? What vol are you looking for uh, here? And um, I,
So
what's up?
Well, I was going to ask a question like related to that. Like, isn't there, uh, uh, can, can you figure out from PA zigzag the like skewness of the vol? Like in that overnight example, right? That it's like this is the skewness is down. Like
That's
stop trying to take longs or something.
Uh,
3 o'clock. It's 3 o'clock, and you're at 78 points.
yeah, yeah, fucking killing it. We can
It'd
look
be
at we can
it'd
look
be
at
cool to bring up the trade activity or like the trade.
this one fucked up. This
Uh,
one fucked up somehow. So this is I want to buy market to close that one. So I'm gonna stop that
That's
one.
interesting, dude.
But yeah, yeah, man. I mean, I think. Wait, what I wanted to hear. So Vespa
Yeah,
had a thought that
sorry,
I wanted
dude.
to hear about skewness of like. So do
The
that. Say that one
zigzag.
more time on the.
so you know the rotation. So you know that like an average up rotation, average down rotation, or just average rotations like absolute value of. But is it like you were talking about moments last week, and the third moment
Oh
is
yeah, the skew.
skewness?
Yeah.
So like so how in Rue's like overnight example and your cautionary tale of like what would be bad for this would be you hit the stop loss or you know you enter like you keep entering the long one because you're hitting the bottom of R and then it keeps going down. So you just hit the stop loss and you create new brackets and you hit the long again and just keep hitting the stop
Yeah, if it's
loss
just
of
a
the long.
straight grind. Yeah, if it's a straight grind or like a really strong linear move is gonna you're gonna pay.
Right. And so you could tell that was happening somehow with PA zigzag of uh w- we just aren't hitting the average down rotation, right? Like in or something. I don't know how you would do it, but I was thinking
It's an interesting
skewness.
question. Skew. Yeah, and I wonder. We could estimate skewness on these things. Some sense, I'm trying to say like, do you have a big difference in up down rotation? But you're asking something else, which is like, are some rotations like way, so rotations are never going to be negative, but you're going to have some kind of like, here, wait, let me get the paint deal up. Rotations. I'm curious. We could look. That would be a fun one. Maybe do that next week. Is like, what does the actual like histogram look like on like inside PA zigzag? Can we get a handle on that? Like, I could probably write some code to have this get spit out, which is like, does your rotation histograms that look like this, again, and you're bounded below, so it's not like you're going to have some sort of like, my guess is that you have a longer tail, like you said. So you do have some skewness in the distribution here where it's going to go much further, and you're going to have some freak times where you get like an extra long rotation at your time frame. And maybe that's again, like to some extent, that's probably the risk you're getting paid for. Is like most of the time you're getting paid for risk premium. And what's the risk premium? Is saying like I'm willing to take the risk of eating absolute shit in the event this happens. Right? But I think that this is going to happen enough that if I treat this guy like normal and I trade around the fact that I think that's going to be normal most of the time, I'm willing to live with occasionally eating a bunch of shit because the even that linear move at the beginning of the farm payrolls day was not super pleasant. It didn't really make any money right at the beginning of the day, but there was enough of this sort of normal quote unquote behavior to
Right. It's like once that grind set in and the chart just starts grinding, it did very well during that. Once like the algorithms or whatever the hell is, once price action determines its direction and it begins its move toward it, and then we have that little up and down in it, This thing thrives on that.
Yeah, I mean, I don't think drift is going to hurt you if you've got enough of this going on,
Yeah,
right? Like what you're betting on is that there's enough of this rel
yeah.
this, right? It's the ratio there, right? It's the volatility rel the drift. And so the only thing that's going to screw you up is, if on that time frame, two things are going to screw you up. Costs, if you're trading micros, and again, we'd have to play around with this. Slippage is going to be painful in some of these moves. The question is there fill percentage? Right, like I'm very curious to see. And again, we've got two crazy uh, samples, but like get some more samples, do some more like dick around with this thing on replay and live. And then I think the thing to do would be, see if on one of these, on a funded account with God, I hate Rhythmic so much, but that's probably the next thing to try. And really, if it comes down to like that data feed's just too wonky and this is too sensitive a strategy, I may end up trying this on a PA. That could be fun. It could also really hurt, but if it looks enough, if it looks like that often enough, if we get enough of these, let's see, let's
Yeah.
look at that thing. If we
You're
get enough,
okay with eating once in a while.
yeah,
What
yeah, totally. Wait, so let's see. I want to filter this
it'd be
for,
interesting to have this up while like next to the day replay, because my perception when we were watching 5-2 was that the huge the news spike, it actually only got like 7 points, but then there was a point where it got like 40 points and kind of hovered near 40 most of the day, and towards the end did really well.
yeah. I mean,
So I think that
let's see. How do you get it to
there was
show?
some hint towards just Sim2.
Yeah, yeah. I'm doing just Sim 2. I got that right. I wanted to do it in dollars rather than. Uh,
Oh,
what do
Display
you
maybe
need?
settings.
maybe edit. Yeah.
Edit.
Well, there's
Edit.
also display settings at the top right left.
Oh, that might be it.
Oh, yeah, totally. 100%. Okay. Currency value. Yeah, not too shabby. So the run up to drawdown. Well, in the other one it was like 4-1. Here it's like a little worse. Um, not as. I mean, you ended up with a
It
higher
won't blow an
profit
account.
factor. Yeah, that certainly my PA could live with that.
Like if
Um,
you're doing an eval account with it, like a $900 drawdown on an eval for like Apex or Top Step or whoever, you can survive that. They won't blow your account.
cool. Yeah, and the other one had a $1,500 drawdown for a 4K
Mm.
run up. So this one made more. Yeah, I guess so made a little bit less money, but it had actually a worse drawdown to run up ratio, but higher profit factor. Um, so and again, commissions are going to take a bite out of that. So if we can estimate that, how many trades they had? 40 trades on ES. Take 40 total trades. Then that's two-sided. So 80 times. I don't know what we want to say. Three. What are they doing? $3 a side.
I mean,
200.
I
So
was gonna say like 268 or something. Let me
okay,
look it up.
yeah, just being conservative. I think like
oh,
conservatively take $300 off of that. But that's pretty
okay.
fucking good. I mean, take
That's
10%
yeah,
off,
that's
right? Like if you can pay
nothing to
10%.
complain about.
Yeah. Yeah, and the other question though is like, okay, how many of those fills were like ticked, right? Like I didn't see many watching it that were just like, ticked and then Sierra gave me an unreasonable fill. It didn't trade through the price, right? And there's some question of like, am I because that's something you have to worry about if you're making a market real low latency is you have to wonder, did I actually get picked up, right? Do I have good queue
Uh,
position becomes part of the game, right? So here, and maybe with a thicker market like UB, you gotta do a little bit more worrying like that. But thinner markets, it's probably gonna. Um, but I don't know. I think that's something to think about. How much does that happen? Because again, um, you're gonna lose 100% of the ones that pick you up, and then the ones that just barely touch and then go, you're gonna wish you were in those, right? And so then the other question is on the slippage on the stop loss. Is there Was Sierra simulating that appropriately?
I
Right,
wonder how
because
this would do in copy trading to other accounts also. That's possible. We just open a chart for each account and run it like that. But if you did that, and if you had, say, you had like 5 live accounts and you were trying to run it on across 5 accounts, it would look better if it was all copy traded rather than five. Because if you ran it through 5 different charts and there were slightly differences in executions, they would be like you're running a bot.
I mean,
But you can run
yeah, I
bots.
don't. A lot of these allow you to do a bot as long as you're not doing something super low latency. Like if as long as you're not trying to like make a market, because then you're gonna get some goofy effects on. Like you could
Yeah.
exploit some goofy effects in their fill algo for the rhythmic simulation that all these things are running on. So they say don't do that. They'll totally not pay you for that. This one, I mean, again, a lot of them are like auto trade. All you want. We don't care. Um, and I
Oh,
think
yeah, as long
though
as
if
you sit and watch it or something.
yeah, like babysat auto trading is okay for them. So they say some of them. I think you'd have to dig into the rule book on some of these guys, and I know if you really taking them cleaners, they're gonna try to not pay you, right? It's like
Yeah, that's for sure.
that's
They'll rewrite the rules
yeah,
or whatever.
yeah. If you're doing well enough on bots, then you're just gonna have to do it in a PA. But here's the thing: the reason I put it back to points is because you got 80 points, you did 80 trades. So in reality, and you lost, so your stop got hit on, let's say, half of them. So there were 40 trades where you got slippage on a stop. Now the question is, did you get one tick of slippage or did you get 1 point of slippage? Because if you got one tick of slippage 40 times, right? No, so it's no, it was 40. So it was 20 trades. Let's say you did 20 trades. You hit the so on 20 trades you got, let's say, I don't know what the spread in ES on that day was, but let's say worst case scenario, you got one full ticket slippage. So then you're taking 20 off of that. So you had 60. So I think the thing that's going to matter a lot more than the commissions on ES and NQ is the slippage on the exits. And so that's the thing to be really careful about. And do a back of the envelope calculation on that here. It's going to be a little worse than 20. It's going to be like 22. And the question is, if you got one tick of slippage, like whoop de fucking do, I paid 5 points on that, right? But if you got, if you started to get a full point of slippage on all these, that's going to get uncomfortable about how much of your P&L is going out the door on
Mhm.
that, and you're going to get an inflated sense of how good it is on that basis. I think that's the biggest danger. I think on thick markets, you're going to have danger about like, did I get actually picked up on the simulation? I think on the thin markets, you're going to say, I think that's the question: is my slippage out the back end? So I'm going to stop recording here.